Welcome again to our accounting classroom, and we are continuing looking at the topic of process costing, but this time we are going to do the process account using to value in doing the process account. We are going to be valuing our inventory using the first in first out method and also the average weighted cost method. Now when we are doing our valuation of inventory using the methods and preparing the process to prepare the process account, we have to prepare something called an equivalence unit table. Now, the inventory must be valued at each stage to determine the value of the output transfer. So that is what we are trying to do. We are valuing the inventory at each stage of the process to determine the value of the output transfer, and due to the continuous nature of the production, the cost per unit must be calculated by estimating the number of completed units expected to be made within the process. So the concept of equivalent units is where we are estimating the number, what the cost per unit, we are calculating by estimating the number of completed units expected to be made within that particular process. So as I said, there are two methods of valuing our work in progress inventory, which is the first in first out method, and then also the second method is the weighted average cost method. Now, the same concept of equivalent units, this is basically the number of units that would be have been produced during the period of if all of a department's efforts had resulted in completed units of the product. So basically what equivalent units are is the number of units that would have been produced during a period if all of the department's efforts had resulted in completed units of the product. Now, we are going to use this example question called Eternal Limited to demonstrate. So let's look at this question, and we are going to work out all the necessary information then to come up with our process account. Now it says Eternal Limited has the following information in process 3. So we need to process 3, which is the final stage for one of its products in November 2018. First piece of information, the opening inventory of work in progress was 100% complete with process 2 material, 40% complete with added materials. However, they needed 70% of conversion costs to bring them to completion. The costs already incurred on these units were as follows. Process 2 materials $30,940, added materials $21,680, and conversion cost $24,198. Number 2, 3,340 units, including opening inventory, were finished and transported to the warehouse. During that month, 3,650 units were transferred from process 2 at a cost of 76,650 units. Added materials 55,200. 3,650 units were transferred from process 2 at a cost of $76,650. Added materials $55,200 and conversion costs $63,730 were also incurred on the units during the period. Number 3, at the end of the process, there were 720 units completed. At the end of the process, there were 720 units incomplete units. These are our closing inventory units, which were 100% complete with process 2 materials, 45% complete with respect to conversion costs, and still need 30% of added materials to complete those units. So we know some information. So we know that we had 3340 units, which includes our opening inventory. So we don't know how many of those, and they said they were finished. These 3340 units, including opening inventory, were finished and transported to the warehouse. So opening inventory is instead of that 3340. And then we also know that 3650 units were transferred to process 2, and we know our completed units. So what we need to work out now is what our opening inventory units would be. So let's look at this question, because the question is asking us to prepare the process 3 account and using the FIFO method of valuation. And then we have to compute the total cost per equivalent unit for the same period if we had used the weighted average. So I have already started to prepare the tables here. So let's look at our opening inventory. Then we will take the amount that they said that were completed, add our closing to that, and then subtract the amount transferred to get our opening inventory units. So 3340 plus 720 minus 3650. So our opening inventory units 410. We have to complete our fully completed units. So fully completed would be our input units minus our closing units. So that would be input units were 3650, which is the amount that transfer, minus our closing, give us our fully completed as 2930. Also, alternatively, we can also take our output units and minus our opening to get our fully completed units. So we can either use our input minus our, which is the 3650 that were transferred, and subtract our closing, or we can use our output units, which is the 3440 minus our opening, to give us our fully completed. So there are two ways you can work with the fully completed. Input units, which is the same thing as the units that were transferred, minus your closing units will give you the fully completed, or you can use your output units, which is the 3340, which means what you're outputting to finished goods or outputting to another process. You can use that and minus the opening, and it will give you the fully completed. So two ways to work that one. And then we know that the closing is 720 that was given. So then we have to look at the percentage. They are 100% complete here with reference to process 2 materials. So those carries, so you have 0 for equivalent unit and 0 percentage under this method. But let's looking back at the question. It states that the opening inventory of work in progress was 100% complete with process 2 materials, which we established, 40% complete with added materials. So if it is 40% completed with added materials, it stands to reason that if you want it to be 100%, that it needs another 60% of added materials to complete it. So here 60%. So when we are dealing with the opening inventory, we are looking at what is still needed to complete this process. So we have already 40% with added materials, so we need an additional 60% of added materials. So for our equivalent units for this year, it would be the 410 times 60%, which is 246 units. For the conversion, it states that, however, they needed 70% of conversion costs to bring them to completion. So they're telling us how much they need to complete with reference to conversion, 70%. So we enter the 70%. And that is 70% of the 410 units. Which is 287 equivalent units. With reference to fully completed, these are always 100% complete. So we enter that 100 right away cost. And then when we're looking at our closing inventory, for our closing inventory, it says at the end of the process, there were 720 incomplete units, which were 100% complete with process 2 materials. So when we're looking at the closing inventory, we're looking at how much is completed. So process 2 material is 100% completed. So here 100% completed with reference to process 2, 720 units. With reference to added materials, they said they still need 30% of added materials to complete. So they need 30%, which we would make us understanding that they are 70% complete with added materials. So 70% then of our 720. And additionally, it states then that they were 45% complete with respect to conversion costs. So we enter the 45% as given. So they are 45% complete, 720, 45% completed. So then we total our equivalent units column to see our total equivalent units under each section. So we have equivalent units of 3650 for process 2, 3680 for added materials, and 3541 for conversion cost. We want to remind you that your conversion cost is a combination of labor and production overhead, and also direct expense. If you don't have direct expenses, then it is just your labor and your production overhead. So let's compute our costs per equivalent unit for each process. So we have, for process 2 materials, the question stated that number 2, 3650 units, and we did work that out, were transferred from process 2 at a cost of $76,650. So then 76,650 divided by our 3650, which is our equivalent units. 76,650 divided by 3650. So the cost per equivalent unit here is $21. Adding materials, they said adding materials $55,200. So that would be $55,200 divided by 3680, which is the equivalent units for that. 55,200 divided by 3680. And then our conversion cost is 63,738. So 63,738 divided by our 3541. So it is $18. So our total cost per unit, per equivalent unit, is then $54. Right? So a total cost per equivalent unit is $54. So this is our total cost per equivalent unit. So we are going to then look at valuing our inventory under the FIFO method. So the first thing we look at is our balance brought down. And our balance brought down, we will go back then and look at the figures that were given to us. They said the cost already incurred on the opening inventory units, which is the 410 units. Process 2 materials 30,940, added materials 21,680, and conversion cost 24,188. So we're going to take those and add them together to give us our opening balance. So it's the 30,940 plus the 21,680 plus the 24,198. These will be added together to give us the opening balance for our 410 units. So the total cost for our inventory the 410 units will be 3940 plus 21680 plus 24198, $76,818. So then we have to look at the remaining costs on the 410, because remember that those were not fully completed, and we have to look at the added materials. So we have 204 with respect to process 2, the equivalent units for that is 0 at $21. Then we have our added materials. So the equivalent units for added materials is 246 units, so 246. And those added materials, the cost per unit for those is $15. So then it is 246 multiplied by 15. So we get 3690. Then we look at our conversion. Our equivalent units for our conversion is 287 equivalent units, so 287. And the cost per unit for our conversion is $18. So 5,166. Our fully completed units, we have 2,930, and that is calculated at the total cost per equivalent unit of $54, which gives us $158,290. So we're going to add those together, which gives us $243,894. So then we are going to look to calculate our closing inventory, the value of our closing inventory. We just calculate, we look at our opening balance is 876,818. We look at the value of the remaining costs there of process 2 materials, added materials, and conversion costs, and we look at the cost of our fully completed units. And then now we are looking to value our closing inventory. So let's look at the equivalent units for process 2 materials on closing inventory. The equivalent units for process 2 materials is 720 units, so 720. Process 2 material, the cost per equivalent unit is $21. So that is 720 multiplied by 21, which is 15,120. Our added materials, the equivalent units, 504 equivalent units, and the cost per unit was $15. $7,560, and our conversion is 324 equivalent units at $18. $5,832. So again, we're going to total these as well. $28,512 in closing inventory. Now, when you come here, you don't necessarily have to set it up like this with equivalent units, cost per equivalent unit. But you must remember that you're doing a calculation. So you can work out your balance brought down, and you can put down that balance brought down figure. You can then set out your process to materials, added materials, conversion, fully completed, and then just take your equivalent units and multiply it by the cost per equivalent unit to give you your total cost. So you don't have to memorize this table here. All you have to remember is we are valuing our inventory, so we need to take the equivalent units and multiply it by the cost per unit that we would have calculated, and that our fully completed units are multiplied by the total cost per equivalent unit. So now the next step for us to do is to complete the process 3 account, because the question asks us to prepare the process 3 account for the period using the first and first out method of valuation. So we complete the process 3 account because that's what we were aiming to do. But in preparing the process of 3 account, we had to do some additional calculations so we can prepare the process 3 account. So our process 3 account, units, so we have our balance brought down of 410 units, and the cost of those 410 units is $76,818. $76,818. Then we have the process 2 materials that we input $36.50, and the cost of those back here, process 2 materials $76,650. We have our added materials, and the cost of our added materials are $55,200. And we have our conversion cost. So our conversion cost was $63,738. We just calculate our, because the question say that Eternal Limited has the following information in process 3 and the final stage. So we are at the final stage. So because we're at the final stage, we're going to have our output to finished goods. So finished goods. And they said the amount to finished goods was 3,340 units. So 3,340, which is our 2930 fully completed plus the 410 of opening inventory. And that cost is $243,894. That's $243,894. And then we calculated our closing inventory, the value of our closing inventory, so our balance carried down, which is our 720 units of closing inventory at a valuation of $28,512. So let's total our process account. $272,406. On our debit side, on our credit side should be the same. units also add back to the same. So this is our process 3 account completed using the FIFO method. And the next question, the next B, the requirement, they said to compute the total cost per equivalent unit for the same period if the weighted average cost method was used. So this is what we are going to do. I'm not going to do it all over. Just going to take these three here, copy them another place. So if we use the FIFO, the AVCO, so we are going to calculate using our equivalent units table. And for the AVCO, we assume that when we are calculating our opening inventory, that all the units were fully completed in the period. So if they're fully completed in the period, then that is 100% for 10, 100% for 10, 100% for 10. So this is just the basic change. The difference between the FIFO equivalent table and the AVCO is that with the opening inventory, we are assuming that the opening inventory, that all the units were fully completed in the period. So if they're all completed, it's 100% with reference to those right away across. Similarly for the fully completed unit, so only the first line of the equivalent unit will change. So now that we know our equivalent units for the AVCO, now we are going to calculate now our cost, total cost per equivalent unit. So seeing that we're using the average in order to calculate our total cost per equivalent unit, we have to go back to the question and look at our beginning cost. So our beginning cost for our process 2 material was $30,940, and then we had a cost transferred into process 3 for the process 2 materials of $76,650. So we're going to take the $30,940 and the $76,650 and add those together. So it's the $30,940 plus the 76. And that is going to be divided by our new total equivalent units figure of 4060. So here now, 30,940 plus 76,650 divided by 4060. So our cost per equivalent unit for our process 2 material is now 2650. For added materials, at the beginning, it was 21,680. and we've input another cost of 55,200. So we're going to add those two together. So it's 21,680 plus the 55,200, and it's going to be divided by our new total equivalent units of 3844. Which is $20 per unit. And then finally, our conversion cost, the 24,198 plus the 63,738. 24,198 plus the 63,738, and that's going to be divided by our new cost, our new equivalent, total equivalent units of 3664. So which give us $24 per unit for our conversion cost, which give us a total cost per equivalent unit of $70.50. So this completes our requirement 2, which asks us to compute the total cost per equivalent unit for the same period using the AFCO. So this here completes our requirement 2. As simple as that. So again, you can take the time out to pause the video, and you can take the time out, you can pause, you can rewind and go back and make sure that everything that you are looking at, that you fully understand it. Because we want to bring you to full understanding so that you are fully able to complete any question that you have to do with reference to preparing a process account using either the FIFO or the AFCO method of valuing your inventory. Just a reminder that when you have to value your inventory. If you don't know your opening inventory units, you have to calculate those. But you also have to calculate your fully completed units, and your fully completed units, you either take the input units, which are the units you transfer, minus your closing units to give you your fully completed units, or you can use the method of your output units, which is those you're putting to finished goods, minus your opening inventory will also give you the same figure. So you have two methods of working that. So you first have to work out your fully completed as well, and then you will prepare your equivalent units table. After you prepare your equivalent units table, then you will calculate your cost per equivalent unit under the FIFO. You're just using the cost that is given inside of the question, not the beginning cost that they give you. And then after you've completed calculated your cost per equivalent unit, and you work with your total cost per equivalent unit, then you calculate your the cost of your opening inventory by taking your opening inventory costs that you were given and adding them together. And then you take your equivalent units that you just computed here in your equivalence units table, and you multiply them by the cost per equivalent units for each cost element, So your cost element, your process to costing, add the material and conversion. These are your cost elements. So then you would take each cost element and multiply it by its cost per equivalent unit to give you your totals. And you will take your fully completed units and you multiply it by the total cost per equivalent unit. So this will give you the cost of your output, or your output to another process, or your output to finished goods. So it gives you your total cost for that. And then you will calculate the cost of your closing inventory units, again by taking each cost element and the equivalent units from your equivalent unit table for each cost element and multiplying it by its cost per unit, which will give you the cost of your closing inventory. So, and then with your, if you have to do the process costing account and value your inventory units using the AVCO method, then you would assume that all of your opening inventory units were completed, fully completed in the process. So then that would be 100% right away across for your opening inventory along with your fully completed. So when you're using the AVCO, the only section that changed is the opening inventory. That's the difference between the FIFO and the AVCO in terms of the equivalent unit table. And then in terms of cost per equivalent unit, the difference between the FIFO and the AVCO is that you take your beginning cost, add it to your input cost, and divide it by the new, because you're taking an average of the two costs and dividing it by your total equivalent units to give you your cost per equivalent unit. So you can review the question and you can read additionally on process costing. Remember, process costing is using industries such as where you have to convert raw materials into a finished product and they are going through various stages, and you have similar or identical, you're producing a similar or identical product. So you will have it in industries such as breweries, paper making industries, food processing industry, pharmaceutical industries, or refineries. You will find process costing in areas like that. Also remember that process costing is a form of operation costing using industry where units are continuously mass produced through various stages. So we'll see you again on our next accounting classroom.